Hey, what's up? For anyone who's watching this that doesn't know me, my name is Bobby. I'm a high school teacher as well as a high school football coach, hence the name Coach B. Um, Most of you guys, I'm assuming, already know me because I sent you the video, and that's why I'm making this. So I've been investing for, God, over 10 years. Started doing like some day trading, swing trading, maybe 5, 6 years ago. I've had my ups and downs, lost a ton of money, made a ton of money on some good trades, just learning as I go. Read a shit ton of investing books, day trading books, swing trading books, options books, just anything I can get my hands on to kind of learn as I go through this. But I'm more hands on, so I more learn as I go. Anyways, the reason I'm making this video, those of you that are my friends know that a lot of times we get together and start somehow the conversation ends up getting to stocks, or a lot of you guys I'm on a text message with, or we're on different text threads where we're talking about stocks, and more and more people that I know, and I think just across the market, more people have started investing since the whole quarantine and people got sent home, and more people are at home and they have their stimulus checks or whatever it may be, or maybe they just had some extra time on their hands and wanted to get into investing. And a lot of my friends are in the same boat, even more so since the whole GME thing came out. So again, I'm making this video because a lot of times I've been talking to people about GME and the whole GameStop thing, and I'm always hearing the same question. So I figured maybe I should make this for a lot of beginner investors or people who are on the fence or unsure. This isn't meant to replace any of the good DD that's out there. I'll put some links at the end to that for anyone who wants further reading. If anything, this is meant to simplify the whole thing and put it into simpler terms so that maybe some newer investors can understand, and maybe I can answer some questions that anybody might have. So what I did was I've been writing down a lot of the questions that I've been getting, um, and we'll just kind of take it from there. So actually, first off, so my GameStop story, my whole thing, and I know everybody kind of found out about this at a different time. I've been lurking on Reddit for a long time, reading all the different posts and Wall Street bets for the most part. But sometime in December, someone turned me on to it. I started reading some of the DD that DFV put together. And just following along. I didn't get in at $3 like some people did. I wish I did, but I finally decided to pull the trigger somewhere around like the $30 range. And then I told some people about it at that point too, and some people invested, some didn't. Then I told some more people about it at the $100 range, and then I told some more people about it at the $300 range. Uh, and then it dropped, and then since then everyone's like, "Hey, tell me about the next one. Tell me about the next one." And so I kind of just was like watching GameStop. I sold as it was falling down, not near $300, but a lot less. But when I saw it started bottoming out around $40, $50 again, I started hitting a lot of people up. Hey, now's the time to invest in GameStop. Now's the time to invest in GameStop. And sure enough, it's back. Now, I'm not a financial advisor. I don't think of myself as an expert or anything like that. These were just my opinions, and even this video is just my opinions on the whole matter. But you can kind of tell at that point that it was bottoming out, and that the squeeze was still coming. Okay, so anyways, now I'm back in it, and now I'm telling even more of my friends, like, hey man, it's still a good time to buy, and that's why I'm making this. So, anyways, um, biggest question I get all the time: is it really still worth buying GameStop at 160 a share or whatever it is at the time? I think today finished at what, 158. Is it still a buy at 158? Is it still a buy at 175? Is it still a buy at 180? My answer, absolutely. Um, and the squeeze for me is an added benefit. I believe in the squeeze. I think it's still going to happen. But even if it doesn't, GameStop's a buy for me. Okay, so GameStop as an investment, I think is still a good time to kind of get in right now on the ground floor of the new company, what GameStop is going to become. And I don't want to get too much into this right now because there's a ton of great videos out there. A lot of them by DFV or Roaring Kitty if you look on YouTube. And I'll put links again at the bottom for people that want to watch more. But I think the main thing that a lot of people don't understand, that I talk to at least, um, is stock prices. So, for instance, they look at a stock price and say, oh, there's no way it should be trading at $165. But what you don't understand is the stock price doesn't mean as much as the market cap. Perfect example. If I told you that there was a stock that was trading somewhere around $1,500 a share and another stock that's trading at $230 a share, which stock do you think is the better company? Most people would say, oh, the $1,500 stock. And I haven't checked these prices today, but I know that Chipotle has been trading somewhere around 1,500, and McDonald's has been trading somewhere around 230. So you look at those numbers and you're like, damn. Well, how can that be? McDonald's is a way bigger company. They're a way bigger corporation. They've got the retail, like the fast food industry on lock. Well, yeah, you're right. But if you look at the total amount of shares outstanding, McDonald's has 746 million shares, something like that. Chipotle has 28 million, and that's the difference. 28 million times 1,500 is roughly $43 billion company that Chipotle is, and 746 million shares times 230 is roughly $172 billion company, which is what McDonald's is. So you got this way bigger company. The difference in share price is the amount of outstanding shares. And the reason that I wanted to bring that up is because I think people need to get through their heads that yes, GameStop can be trading at 150 right now, and yes, GameStop could eventually make it to 1,500. GameStop could make it to 2,000. GameStop could make it to 500. Don't get so caught up in the share price, which I think is what a lot of early on traders do. And the other thing they think about is, okay, well, this stock over here is trading for $10, so it has way more potential to become a $100 stock. It's not necessarily true. Okay. And at the end of the day, the stock market's based on what? Speculation and prior performance, right? So, in terms of GameStop, the new GameStop is what I like to call it, what it's pivoting towards now. That's basically based on my speculation. We can't really look at its prior performance because the company's changing. And like I said, there's a ton of information out there about the company itself changing. But the main thing that I think that needs to be stated is one, Ryan Cohen, founder of Chewy. If you don't know what Chewy is, go look it up. But they were basically they're the biggest e-commerce kind of pet supply, pet food type deal that's out there right now. And they've got a huge percentage of the pet industry market cap. And so Ryan Cohen, the guy that founded them, basically became an active investor in GameStop a long time ago, bought up enough shares, got himself on the board, and he's taken over the board in the meantime. Okay, he's up to be the chairman of the board. I think they're voting on that in June. And since he's been active in the company, he's been poaching top executives from everywhere else, Amazon and Chewy to name a few. But they've been like almost every week now announcing that they hired a new exec. They hired a new exec. And in the meantime, they've been getting rid of all the old executives that were at GameStop that were running the company into the ground. So when you think about, oh, can GameStop get this high? Absolutely, because it's not the old GameStop. Okay, are they still a brick and mortar store? Right now, yes. But what they've been doing in the meantime, they've been pivoting to e-commerce. You look at their website today, you can go online and order computer parts. You can order apparel. You could still order games, yeah, but you can order all kinds of other stuff. And they're not necessarily dependent on the brick and mortar side of the store anymore. It's all online and it's doing same day delivery, which is, to me, shows that they're trying to be in competition with Amazon for the gaming industry, okay? Which is kind of what Ryan Cohen did with the pet industry. Yeah, I can go order pet food on Amazon, but people are choosing to order it from Chewy. Why? Because of their customer service, because of their overall game plan, and he has turned Chewy into this e-commerce giant for the pet industry. There's no reason why I won't think that that's what his plan is for GameStop and the game industry. Well, the game industry is a lot bigger than the pet industry. The game industry right now is estimated to be somewhere around 162 billion. Okay, and over time, I think I saw an article, and I don't want to be, regurgitating stuff that you can watch in other videos, but the game industry is supposed to reach 295 billion in the next 5 years. So even if, GameStop can come up with a little bit of that market cap, I mean, right now, GameStop's sitting at like an 11 billion market cap around there, with where it's priced right now at about $150 a share, $160 a share. 11 billion market cap for a $162 billion industry. That's less than 10%. Okay. Chewy, on the other hand, 99 billion, 100 billion market cap industry, or cap industry, the pet industry, they got $35 billion market cap. So they're almost sitting at 30% of that annually. Um, so again, if these changes, this pivot to e-commerce and everything that comes along with it, and there's so much having to do with gaming besides just buying and selling video games, and that's what you need to open up your mind to. You have gaming tournaments. You got even just selling online video games, which I bought my kids video games online a while back through Amazon. People say, "Oh, well, I could buy it on the PlayStation Store, or I could buy it on this store." Yeah, you can, but you can also buy them through these other retailers. Also, another interesting thing that and I'll be, like I said, I'll be putting links. But some people have posted that GameStop was recently looking to hire an executive that's has a background in NFTs and crypto. I mean, so there's so much opportunity out there with this company, and right now sitting at an 11 billion market cap and $162 billion industry that's looking to almost triple to get to like a $300 billion industry. Even if GameStop stays where it's at right now and just triples with the industry over the next 5 years, you're looking at an investment that's going to go from $160 to $480, and that's without increasing their capital in the industry. Now, me personally, I believe in this team, this dream team of executives that they're putting together, and I would say that there's no reason to believe that at some point they can't eventually take over 30% of the market cap of the video game industry. So sitting at 162 billion right now, 30% of that is what, probably a $48 billion market cap. Okay, so that would put them at about 5 times what they're trading at right now, roughly. I mean, I'm just doing math in my head. So 5 times 150. I mean, you're talking about 5 times growth from where we're at right now, and that's in the near term. Okay, so anyways, that's my reason why I would say GameStop right now is a good buy as an investment. So even if you don't believe in the squeeze, which I do, but you just want to get in on GameStop just in case, it's a good investment where it's at right now, in my opinion. Now you buy the stock, you're sitting there holding it, squeeze happens. Well, guess what? You just lucked out. So, anyways, moving on. Um, Another question I always get: well, didn't the squeeze always already happen? I mean, stock was trading at $3, and then it went up to 300. Wasn't that the squeeze? Why? Well, yes and no. Okay, so I'm not going to get into the dynamics of a short squeeze and how that works, but basically, someone's borrowing stock. They have to, and eventually they have to buy it back. When they buy it back, it makes the stock go up. Um, what we saw with GameStop in January, I think, was like the precursor to the squeeze, meaning that a lot of the other people that were short probably bought to get out, which helped drive the price, but most of it was fueled by retail interest, with the announcements that they were making, and then gamma squeezes mixed in there. Okay, if they wouldn't have cheated and pulled the plug and disabled the buy button on Robinhood and some of the other brokers that restricted some things, I think the squeeze would have kicked off in January, but I don't think it got there. Okay, it's still definitely, and I'll even say this, um, even if a major portion of the hedge funds and the people that were short on GameStop in January did cover on the way up when it got up to those 480 range. It got shorted all the way back down, and I believe that it's even more shorted now than it was in January. That's my own personal belief. Again, there's a lot of DD out there, that that I think speculates this and has pretty decent proof about this. But that's the impression that I'm under is it's even more shorted now. So even if the squeeze already did happen in January, which I don't think it absolutely did, it's still coming. Um, what about all the other squeeze plays? People ask me, well, what about this stock? What about that stock? Don't you think this one has the potential to squeeze? Don't you think that one? For me personally, I'm on the GameStop squeeze. I think it has a setup that is unlike no other. I think this is a once in a lifetime opportunity. I think that this is different because on multiple levels. One, some of those other stocks that you're looking at that people are hyping about squeezing never had the high short interest that GameStop had. They never did. GameStop was shorted well over 100%. And since then, they've changed the way that they report or the short interest of stocks. So it's been very hard to figure out exactly what the short interest in GameStop is. However, there's estimates that put it well over 100%. And like I said, I believe, this is my opinion, that it is shorted way over 100%, maybe even over 200% now, which is insane. So that alone makes it different. It's got a much smaller float than any of these other stocks anyone's talking about. I mean, this is kind of like a once in a lifetime. It's the mother of all squeezes. I mean, that's what it's referred to, and I really think this is the only opportunity like this that you may come across. Um, so another question, gamma squeeze, because I just mentioned that I thought that partially, or figured that partially what happened in January and even what happened last month when it ran up to about 350 ish was a gamma squeeze, and I've explained this to some people, and some people kind of still don't understand it. But basically, one, I don't know if gamma squeeze is actually the correct term. It's just a term that I started hearing about during all this, but it makes sense, and that's what it's referred to as now. So, anyways, gamma squeeze is more of a squeeze caused by the options chain. So, without getting too much into options, the way options work is when somebody buys a contract, they're buying a contract from someone else saying, I get the rights to buying 100 shares down the road. Okay. And so the person who wrote that contract, whenever they sell it, there's what's called a delta. And that delta is how many shares they kind of need to hold to hedge against that contract that they wrote. So what ends up happening is when you have all these open contracts all the way up the options chain, in GameStop's let's just say you have that $80 strike, the $90 strike, the $100 strike, the $110 strike, all the way up, and there's thousands of open contracts in there. Well, once the price gets kicked off and passes that, like let's say the $80 mark, now the delta for all those contracts might have went up to like let's say zero point 0.5 or zero point 0.6, meaning that the people who own those contracts now need to own 60% of the shares. So 60 shares for every contract written. Well, when you have thousands of contracts at that $80 mark, that's 60,000 shares. And so what ends up happening, they have to go into the market and hedge those shares. So they have to buy 60,000 shares, which pushes the price up to let's say $70. And once it gets to $70, guess what? The $70 contracts are now have to get delta hedged. So those ones have to get bought. Let's say they're again 1,000 contracts, moves up to zero point 0.6. Okay, 60,000 shares need to be bought. But what happens to that lower mark, right? So we just surpassed another mark. So when we pass that other mark, now that one went from zero point 0.6 to let's say 0.65. So now the people that own the contracts at the lower mark now have to go out and buy another 5,000 shares. And all of this pushes it up even higher. So maybe now we got pushed to the $100 mark. And the same thing keeps happening. And the same thing keeps happening. The more contracts that get hedged, the higher this thing keeps getting pushed until eventually it blew out the option chain. Um, and that's happened a couple times now. That happened back in January. That absolutely happened a couple months ago when we had that run from like 40 to about $200 in after hours. But basically, that's what a gamma squeeze is. It's not a short squeeze. Okay, so don't get it confused and think that all these shorts were covering and they covered again and that's why it's gone. That's not what happened. That was all had to do with the options chain and the delta hedging that went into it. Okay. Um, so why is this going to be different? Why is this going to go higher? That's what everyone wants to know. Well, to me, we've kind of created a new base, right? So back in December, the base was around $3, $4, $5 around there, and shit, it got a push all the way up to 480. And then, like I said, they cheated and pulled the plug, and stock dropped. What else is it gonna do when all you can do is sell? Um, and then we go back to when it was about 40, $50. I mean, it had its run, and it got to about 350, and then it got manipulated again. But the important thing is it found a new base. Okay, well, now I feel like it's found a new base again, kind of in this $100 range. It's been sitting, floating between like 150 to 180 over the last 3 or 4 weeks, just kind of like in this range. And it's kind of found this new base. And if it's as heavily shorted as all the DD that's out there speculates, and as I believe, and as a lot of other people believe, well, now when the short squeeze actually kicks off, it's going to go a lot higher than it ever would have went in January. Okay, and basically, the whole theory behind this is there's more shares shorted than there are available. So at this point, whenever the short squeeze actually does kick off, you're gonna have people getting margin called needing to buy those shares, and there's not enough there. So now you have people, almost in this frenzy trying to buy. And on the other side of it, you have the shareholders, people like us, who you don't have to sell for what the market price is going for. You can hold those shares until the price gets to what you're comfortable with selling for. So that thing could keep going up and up and up and up. Um, which kind of answers my next question, that I also get from people all the time. Well, who's going to buy at these high prices? You know, won't don't you need buyers to make it go up? Well, yeah. Well, first off, the people that are getting margin called are the ones that are going to have to buy it. That's the whole theory behind the short squeeze, right? At some point, the people that they're borrowing the shares from are going to say, "No, give me my shares back. You're out of money. You've been paying interest for too long. I need my shares back." And when that happens, they're the ones that have to buy. But in order to kick that off, yes, the price does need to go up. It does need, and it has gradually been increasing. I mean, yeah, we've seen some dips, and the stock's very heavily manipulated. I mean, it's been manipulated for a long time. But what's going to make it go higher? Going back to GME, the investment, in my opinion, um, you know, the company itself is pivoting, and the company itself has been announcing these catalysts and these new hirings and these getting rid of old people. And every time they make these announcements, every time they as we move forward, as they start announcing things that they're going to start doing, um, I think other people are going to start buying into it. And I'm not talking about retail investors. I'm talking about institutional investors. I'm talking about other, people on Wall Street are going to start looking at this and saying, man, this is a good company. This is a good investment. And you'll start seeing more of that buying. So every time that these announcements come out, they're little mini catalysts that will push it forward. In terms of big catalysts that are still out there that I think can really kick this thing off to kind of get that buying going, you have two major ones. Right now, the company is looking for a CEO. There's speculation that Ryan Cohen might be the CEO. I don't know that he will be. I think that him sitting as the chairman of the board kind of puts him with more power. He could choose to be, but they're going to announce a CEO at one point. And when that happens, that's going to be a major catalyst, assuming that they announce the right person. And I have faith that they will. The other big catalyst, I think, is going to be that June 9th meeting when he actually gets voted in as the chairman of the board. And any other announcements that kind of come out at that meeting, leading up to the meeting or after the meeting. So there's still some room for hype. I think that between now and June 9th and even afterwards, we're going to keep getting these positive press releases that come out that kind of combat the negative media that's been going out about GameStop, and this is just a squeeze, and this is just some old brick and mortar company, and all that other kind of stuff. Okay, so the company is doing the right thing. As they continue to pivot, they're going to keep putting out information. As they put out that information, those become mini catalysts. Those become reasons for people to jump in and buy. And every time this happens, the price goes up. And every time the price goes up, someone who's short is losing more money. And the longer that they hold on to the stock, the more money they're losing just in interest alone. Okay, so it can only go for so much longer. Um, when's it gonna squeeze? Get that one all the time. I have no idea. If I had Biff's almanac, I'd be a rich man right now. Okay, um, and I probably would have bought way more calls than Roaring Kitty did a long time ago if I knew the future. I don't know. My speculation is I think it's going to happen between now and June. I think we're getting close, but I could be totally wrong. I mean, this could take another year, but where else is your money better, right? I mean, you look at the market; things are choppy all over the place. And for me, what investment can you say that you absolutely know is going to double within the next year or two? Double within the next year or three. I mean, not everything's speculation, but to me, I truly believe that GameStop, once all this stuff comes out, they pivot, they start turning into this e-commerce company, they start making announcements, reporting quarterly earnings, all that kind of stuff based on what they're doing now and what they're going to do in the future. This is a good investment. So I'm willing to buy more right now at 160 a share, 155 a share, just on the straight investment side, and I don't mind holding until a squeeze happens. But the squeeze is going to happen. I mean, it has to, because at some point, these people who shorted the stock have to get out, and the only way for them to get out is to buy. And there's so many shares shorted right now that the buying back of those shares is going to drive that price so high that even more people are going to have to get out until everybody's out. And there's not enough shares available for everybody to get out. Um, all right. How will I know if it's squeezing? Okay, so I've heard this a couple times, especially on some of these run ups, like when we ran up to 350 a while back. Is it squeezing? Is it squeezing? How will I know? To me, um, it until we start seeing multiple circuit breakers in a day, and the price getting well over 1,000, it's not the squeeze. It might be the precursor to the squeeze. It might be some people covering. It might be a gamma squeeze mixed in, because anything like that's going to blow the option chain out. So however high the option chain is for that week, if it goes up to 690 where it's at right now, or back up to 800, like some of the monthlies have 800. But if we start getting surpassed that, I think that price is going to be so high that now people are going to get margin called. And that's when you're going to start seeing rapid upward spikes. And that's when you're going to start seeing circuit breakers. I don't know for sure. I mean, I've been involved in uh, a couple squeeze. I mean, squeezes happen all the time. As a day trader, you might be in a stock, and all of a sudden, it gets some buying pressure, and bam, it just it jumps up. Um, and it happens over the course of like 5 minutes. This is different. This is different in that, again, this is a stock that's well over 100% short. People are going to be getting margin called, in my opinion, at different times. Some of the smaller banks that don't have as much money will get margin called a lot sooner than some of the larger banks that have, a ton of capital to back up and keep paying interest. But the higher it goes and the more people that get margin called, the higher it'll continue to go. So, how will you know? To me, once we start surpassing the thousands, once we get past 1,000, you're getting, circuit breakers every couple minutes. All right, the squeeze is on. How long is it going to last? I mean, I've seen a lot of DD out there. I've never seen a squeeze um, last longer than a day, but those are way smaller in comparison to what we're talking about. A lot of the DD out there says it could last days, it could last weeks. So and it's going to take a while to unwind, meaning even if it does take off, don't be quick to like, oh, the squeeze is here, let me sell. You're going to be able to see how high this price gets and then make a decision on when you want to get out. It's not going to be something where you have to be sitting at the computer right when it happens. And a lot of your trading brokers, no matter who you go through, should allow you to set alerts. So you could set an alert for, right now I have an alert set. Tell me when GameStop, even though I'm watching it every day, tell me when GameStop gets above 300. All right, because I think to me 350 is kind of a significant number because for some reason they haven't been allowing it to get past that. So I kind of set an alert for that, but in no means do I think that that's when the squeeze is going to kick off. Um, how high will it go? When do I sell? I don't really want to touch too much on this without people trying to say you're a shill or this or that. I mean, I don't know how high it'll go. I don't think anyone knows how high it'll absolutely go. If you look around, there's people that say 10,000. There's people that say 100,000. There's people that say a million. There's people that say 10 million. Yes, 10 million. Um, and some people that say even higher. Can it get to 10 million? Absolutely. Will it? I have no idea. I mean, I don't think anyone absolutely knows for sure how high the stock can go. To me, when do you sell? That's up to you, your risk tolerance, what it comes down to. But I will say this: if the whole theory behind the short squeeze and getting these astronomical numbers that we can all sell for is that everyone's going to hold out, right? So first off, how does the stock get that high? How does it get to from 1,000 to 10,000? Well, the way it works is the way the market works is based on what you sell for, right? So if you got all these people that own the stock and they're not going to sell, um, and the stock's trading at 1,200 bucks, 1,300 bucks in the early stages, and nobody's selling, it's not going to go any higher until someone buys for what you're willing to sell for. So if the next sell order, let's say one of you guys out there is willing to sell a share at $2,000, well, if as soon as someone buys it, bam, the stock goes up to 2,000. Yeah, we'll have a circuit breaker because that'll be like a 40% increase, and we'll have a 5 minute delay or whatever. But then as soon as things come back on, if nobody's selling, the stock's going to sit at 2,000 and until someone else puts a sell limit up there. And once they put a sell limit up there, let's say someone puts it at 5 grand. Yeah, the buyers might sit there, the hedge funds, the people that are being forced to buy might sit there for a second and say, oh, let's see if we get a lower, but at some point they have to buy. They're getting margin called. So shares are going for 5,000. All right, bam, I'm buying for 5,000. Who can be the first one out of this? So now all of a sudden we're at 5 grand. I mean, the only thing that's going to make this stock go up is people actually willing to sell. But so again, the whole thought process behind this is the longer you hold out, the higher the price will go. And if everybody holds out long enough, yeah, we could see some astronomical prices. But that's going to take everybody holding that long. So when do I sell? To me, you're never going to be able to time the peak. I mean, if you can, it's just dumb luck. I don't think there's no analysis that'll tell you when the absolute time to sell would be. But for me at least, I mean, I have no clue what I'm going to do when this thing actually kicks off. But I guess what I'm probably going to do is see how high it gets and try to catch it on the way down. And the reason I say that is, you don't want to sell. Let's even just use some lower numbers that maybe sound more reasonable to some of you guys that may not be believing in this. But let's say it hits 5,000 and you're just like, oh, this is life changing money. I need to get out now. And you sell at 5 grand, and then 10 minutes later the stock is at 20 grand. I mean, to me, I would rather wait, watch it go up to 20, and then say, okay, it's at 20 now. I'll sell if it gets cut down to 10, basically in half, and now I'll jump out. But if you utilize that mindset, now, yeah, you're never going to catch the top, but you're also not going to risk getting out at 5,000. So if I do that and I wait and it goes from 20, and let's say it does go up to a million. Okay, well, it's at a million. I'm not going to sell. I'm going to wait and see what happens. All right, now it drops. It's at 700,000. Now it's at 600,000. Now it's at 500. Okay, you know what? Maybe that was the top. I'll sell for 500,000. But by waiting, shit, maybe it goes to 10 million. Maybe it goes higher than that. There's no way of knowing. Can it? Absolutely, it can. Will it? I don't know. Um, what's the next question? Oh, what's a circuit breaker? Okay, so I've been talking about the circuit breaker and what happens, and some of you guys may not understand. I know with the first squeeze, there was a lot of people like posting, like, "Oh, they're cheating again. They stopped it. They stopped it." No, so a circuit breaker basically happens with any stock whenever it jumps. I believe it's 10%, but when you get like a 10% jump within a 1 minute candle, automatically they pull the plug, shut it down, I think for 5 minutes. Sometimes it can extend all the way up to 15 minutes, but the stock will be frozen. Nothing can happen. And then all of a sudden, they'll start it back up. So that's why I say on the way up, and even on the way down for that matter, you'll have opportunities to get out because there's going to be circuit breakers. I mean, you're talking about jumping from 1,000 to 2,000, that's a circuit breaker. And then we come out of that $2,000 circuit breaker. It doesn't have to go in 10% increments. It's not going to necessarily go from 1,000 to 1,100. All right, it can go from 1,000 to 1,500, which is a 50% increase. But when it does that, that will trigger the circuit breaker. Okay, so I mean, it could jump from 500 to 1,500 after one circuit breaker. It just depends on what somebody out there is setting a sell limit for. I hope that clears that up. Technical analysis. I'm really big on technical analysis. In terms of trading, swing trading, especially, sometimes with day trading. But to me, technical analysis doesn't apply to GameStop. This is kind of like a one-off type of deal where this stock doesn't perform like other stocks. I think it's mostly because it's heavily manipulated. So I wouldn't expect to be able to look at any sort of technical analysis and try to predict when something's going to happen. There's a lot of good DD out there, and I have fun reading it. And it's always good to kind of get the motivation up and get some confirmation bias and that sort of stuff. But I don't necessarily believe that any sort of technical analysis, people drawing wedges or people saying there's a bull flag or a cup and handle or any sort of this stuff. I mean, it's all good because then if it happens, then it's like, oh, look, I called it out. But when it doesn't happen, then it kind of lets you down, right? And it's hard to, really be bought into some technical analysis because every time you see one and then you think, oh, today's the day or it's going to happen this week, and then it doesn't, it's a big letdown. And the stock just doesn't perform the way these other stocks do. I mean, it could swing upwards or downwards any day because it's so heavily manipulated. And if you want to see, there's a ton of information out there on how it's being manipulated. A lot of it's speculation, but I like to look at it, a lot of it as proof, because a lot of people have put in some good time and some good research into doing this DD on the manipulation that's taking place. And I'll put those links on Reddit. SuperStonk, that's STONK, is a great resource if you're looking for some of that information on the manipulation that's taking place. In terms of technical analysis, there's a user from that same subreddit, Warden Elite, who live streams a lot of times. Sometimes I'll watch him and he goes over the technical analysis. And I'm not knocking it. I'm not saying that it's not good work. Sometimes I'll watch the stream too. It's also great to watch his stream if you don't have access to all the charting materials. And you could learn a lot about technical analysis by watching him. All I'm saying is, with GameStop in particular, I don't feel that technical analysis is going to be an indicator for where the stock's going to go. Okay. Some of you guys that actually do lurk around on Reddit have asked some other questions. What's negative beta? There's been some stuff that you know, GME now has a negative beta number. I forget what the number was, but basically that beta number is consistent with the market, right? So if something has a positive beta, it basically means it's going to move with the market. When the market goes up, this stock will go up. When the market goes down, this stock will go down. So a lot of times when people want to hedge their portfolio, they'll try to get stocks that have negative betas because stocks with negative betas are going to move opposite of the market, right? So if the market crashes, my stock's going to go up. If the market goes up, my stock's going to go down. So right now, I haven't looked in a while, but GameStop's beta at one point I saw it was -2, which is crazy in itself. But I've also seen some other ones that had that number higher. Again, to me, that's kind of like the technical analysis side. Those numbers are derived from um, basically historical performance, right? So in the past, especially from January to now, the SPY is ripping and GameStop was falling. There's your negative beta, or the SPY was on some down days and GameStop was ripping. So that, the historical perspective of it shows that the beta is negative, but I don't think that it's truly indicative of where the stock's going to go. I watch the SPY all the time just because it's a good market indicator. And there is some days where I see the SPY going down and GameStop going up, which fits the beta thesis entirely. But there's other days where I see the SPY going down and GameStop going down, or the SPY going up and GameStop going up. So it's kind of, again, that kind of gets into that whole technical analysis thing where I just think that this stock doesn't follow any of that. Best thing you could do is just buy some and hold it. And hey, it's a good investment down the road, but you're also in for the squeeze when it happens, not if it happens. Um, should I buy now or wait for a dip? I've heard that plenty of times. I've heard that from people when we were in the $200 range, 275 range, and if you didn't buy, hey, you lucked out. Now you can get it for cheaper. Um, but I've also heard that when we were down at 130. I've heard it when we were at 100. Right now we were at 155. I'm looking. Looks like we went up to 162 in after hours, and now it's down to 159. But either way, there's really no way of knowing. I don't think you could wait for a dip because at any moment this thing could rip. But if you buy tomorrow, at any moment this thing could lose $30 a share. So and I know people have probably heard this a million times. Don't use money that you can't afford to lose. The way that like to look at it is, it's not so much losing, because I don't plan on selling any of this stock for a loss. Don't use any money that you're going to need access to anytime soon. Because, again, going back to it being an investment, as an investment, I'm buying this stock and I'm willing to hold this for the next 5 years. Okay, because I think the stock will triple, quadruple, with the company as the company gets better. Um, so that being said, if I'm buying this with that mindset, why do I care if it dropped $30 tomorrow? I shouldn't care about that because I'm holding this for the long run, right? I'm in this because I believe in this company. Um, so buy it now. I mean, you buy it now at 160. You could wait until it falls to 140. It may never. I would still buy it at 200 because to me, ultimately, I'm thinking, and I'm not like a professional analyst or anything like that, but I'm thinking this is going to be a $500 stock once the squeeze is all over and done with. Once this company comes out and, you know, you get we get past the squeeze, we kind of get past the whole meme status of it and all that, and now it starts really working off. Hey, here's Ryan Cohen. Here's what the company's pivoted into. They're becoming this e-commerce giant. Whatever else they're trying to accomplish, once they get the ball rolling with their new board and everything, this is easily going to be a $500 stock. And for those of you that think that's insane, again, I gave you the example earlier of Chipotle. Was it 1,500 bucks or something like that? And typically, what happens and what a lot of people don't realize with these stocks, and I'm going back to it now. If GameStop ended up after all this leveling out at 500 after the squeeze, the company would probably just do a stock split, right? So they would probably come out and do a 10-to-1 split and chop this thing down to like 50 bucks to make it more, to lure more people in. So people that are afraid of the $500 stock price will now see it at $50 and be more apt to buy it. And that's what a lot of companies do. Tesla's done it, Amazon, everybody does it over time once their stock gets so high. Um, but anyways, for me, I like the company. At first, I was in this for the squeeze a long time ago, but the more that I've been reading about it, the more we've been, reading DD about it, and then seeing all these press releases and what's going on. And I mean, I didn't even know what the hell Chewy was in December. Now I'm a believer in the company, so I have my shares. And when this thing takes off and it squeezes, yeah, I'm going to sell because who wouldn't when the price is that high? So I'm going to get out during the squeeze. But once things level back out and this thing, levels out wherever it ends up leveling out at $200, 300, 500, whatever it may be, I'm getting right back in. Which is the other reason why I'm telling you I believe this is a good buy today. Because even if you don't believe in the squeeze, this is a good investment. What other stock can you put your money in today and have a really good feeling that the way this company's moving, this stock's going to double by next year? Um, and that's where I'm at with this stock. Last question I'm looking at is, should I buy options? If you don't understand options, no. If you have no experience with options, no, absolutely not. Um, this isn't just like how I said, this stock doesn't perform like any other stock. You buy options on this stock, especially, IV is somewhat low compared to squeeze levels that it's been at, but it's still a high IV. And the way options work, you could lose it all. I mean, you got to look at options like betting. And basically, if you did options on this, you're placing a bet that you could lose 100% of your capital with. If you buy stocks, you're not going to lose your capital. The stock isn't going bankrupt. Okay, this company's not going bankrupt. They're debt free. They paid off all their debt recently. Yeah, it could fall, um, but it's going to come back eventually. And so, stocks is a safer play. Now, if you have experience with options, I don't imagine you're asking me that question. And there is some plays out there, but I don't want to get into it because anyone who doesn't have the experience with options, I think this is a bad stock to really to try to get into options with. Um, I think that's all I have. Let me look here. So what I'm gonna do is right now when I wrap up this video, and I hope you guys enjoyed it. I know I ramble on a lot. But I'm used to, like I said, I'm a high school teacher and I've been teaching from Zoom for the last almost more than a year now. And so this is what I do every day, anyways. But I'm going to put some links at the bottom of more information, people that you guys can get information from because I didn't come up with this information. This isn't my DD. A lot of this is from me reading, um, you know, on the subreddits, on Wall Street Bets originally, watching videos from Roaring Kitty way back when. Now, then going into the GME subreddit, then moving over to the SuperStonk subreddit. Um, so I'll put all that information on there. Before I get off, though, I will say this just to give a shout out. So for me, if you're looking for confirmation bias or just any sort of good DD that may be coming out about GameStop, absolutely the place to go for me is SuperStonk because even if it comes out somewhere else, they'll cross post it there. Um, in terms of websites that I look at throughout the day while I'm sitting here, you know, watching my stocks and doing stuff, there's two main ones, gme.crazyawesomecompany.com, which is also kind of like the Stonko tracker. I don't even know where the hell I found that out. I think one of you guys sent it to me. But basically, it's got some really good information on there in terms of how many shares are available at the time, which kind of lets you know. I mean, it really doesn't mean nothing because sometimes it shows that there's 0 shares available. Sometimes there's 500 shares available, but it kind of lets you track things. It also gives you some really cool target prices. Like, for today, it's showing that 4,000 calls are in the money. This is more Gamma Squeeze related now. But at $170, we'll have 7,000 calls in the money. Once we pass 170, it'll put up the next dollar amount. That's kind of like that big amount. So it's kind of fun. If you're sitting there and you're watching the stock at your computer anyways, I like to look at this website because it does have a lot of good information out there. Another one that I've looked at in the past is like the Swaggy stocks. only because it's got that max pain calculator on it. And what that does is it shows you where, from a market maker's perspective, um, where they want the stock to be. So as a market maker, obviously they want to pay as least amount of people as possible when it comes to the options chain. And sometimes you can kind of, if you're watching the stock every day, you can kind of see that it's getting manipulated towards that point. It doesn't always fall near that point, and a lot of times it goes well under it or well over it. But it is kind of, cool information to see for this week. What is the max pain? Max pain being, um, where the majority of the people who are bullish and have calls where they're going to lose the most money, and the majority of people who are bearish and have puts where they're going to lose the most money. So if you kind of see that, it kind of gives you an idea of where maybe the market makers are going to try to drive the price to, which I'll also just bring up real quick. So when you look at this and why is this stock, why hasn't it closed yet? Um, we're fighting against a lot of people. Us as GME investors and people who want the stock to squeeze, we're fighting against shorters, hedge funds or even retail shorters, anyone who wants the stock to go down, obviously, right? Then we're fighting against market makers. So the market makers, obviously, in their own right, don't want to see gamma squeezes because they stand to lose a ton of money if they haven't already hedged the shares. And there's no way that they could possibly have hedged the shares because there's not enough shares in the float. There's only 40 million shares in the float. I know that us retail investors own a large percentage of that. So then you start looking at the options chain. And if you blow out the options chain, right now, just looking at the Stonko tracker, you get into the $170 mark. If it finishes there on Friday, that's 7,000. So that's 700,000 shares just right there, added into the 4,000 that already exists. Um, I mean that's quite a lot of shares when you consider there's only 40 million. So yeah, the market maker, we're fighting against them. They don't want to see gamma squeezes. They don't want to see these calls just get blown out and the option chain get blown out. And then we're fighting against day traders, right? So us as retail investors that are in this for the long haul, we're buying up stock and we're holding it. But you have day traders who, are buying the dips, which help get us out of the dips. But then when we hit peaks throughout the day, they're contributing to that selling pressure. Okay, so we're kind of fighting this battle on three fronts. Not sure where I was going with that, but anyways, in terms of YouTube, people ask me that all the time. Is there anyone I watch on YouTube? In terms of GameStop, I don't really watch a lot of YouTube. There is some people I watch to get, kind of information on other stocks, other people that do good DD. But in terms of GameStop, if you want to watch someone for YouTube for GameStop, like I mentioned earlier, Warden Elite, who's a member of the SuperStonk community, he does live streaming sometimes. And so if you want to sit there and kind of track the price of GameStop and see some technical analysis, he's a great dude to check out. Also, I watch Uncle Bruce sometimes. Came across him through this whole thing, and I've turned him on, and he's a cool dude. A lot of experience in the background in finance, kind of an older guy. What's interesting with him is I wouldn't go to his channel expecting to hear about any of the newer revelations happening with GameStop because, I mean, he's just sitting there with an iPhone looking at the tracker. He's not putting anything on the screen, kind of like this video right here. Boring, right? But he does, I would say maybe 70% of his channel is him thanking other people for joining and telling old stories about him in the markets, but he does also cover GameStop. So occasionally when I'm doing stuff in the morning, I'll just throw him on if there's nothing else going on, and you could listen to it, and he'll give you some price updates, and he'll answer people's questions in the chat, which is a great way to learn if you're new to it, because I have noticed that a lot of his users are kind of beginners to this. So you'll get a lot of beginner questions, and so if you have those questions, he'll answer them for you. So I'll throw his link in the chat too, along with I'm going to throw some links to some of the better DD posts that I've read on Reddit, and also a couple other articles for anyone who's interested. We're approaching 54 minutes. I did not think I was going to talk this long. I was putting this video together. I thought it'd be 15, 20 minutes long, but here we are. So I hope you guys enjoyed it. Not really sure what to make of this. I just figured I'd make this video because there's so many people I talk stocks with. I may end up doing another video that has nothing to do with GameStop, that just explains like kind of beginner options, because a lot of my friends and you guys that I've sent this video to have been asking me about specific things with options. And I feel like, if I could share my screen and kind of go through and maybe break some stuff down for you, that might be the next video I make when I find the time. All right, I'll see you guys later. Thank you very much for watching if you did.